Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news key policymakers are moving markets. Bernanke came to the rescue of risk assets yesterday after he indicated that monetary policy would stay highly accommodative for the foreseeable future. Bernanke has proved himself over the past few years as a friend of the markets, even though that may not be his main intention. Yesterday's comments suggest he is all too aware of the mistakes his predecessor made following the Great Depression, a period in which he is a noted authority. Monetary policy was tightened prematurely by the Fed in the 1930s, and it seems that in 1913, Bernanke would rather err on the side of caution, particularly when inflation is so low. Expectations of QE tapering have now been scaled back, and the markets have rallied accordingly. US equities are up strongly this morning, up more than 1% in New York, following the Aussie markets, which were up 1.3%, as are metal prices. Gold is up to $1,285 an ounce this morning, and copper is at a 3-week high, although oil has fallen back to more than $3 a barrel. Not everything was rosy, however. More people claimed for unemployment benefits in the US last week than was expected. On the other side of the coin, the US Treasury reported a budget surplus, its second in the past 3 months, and at a level almost 3 times what the markets were expecting. A sharp fall in outlays in June and rising revenues were the main cause of the unexpected result. China looks set to soften its stance on monetary policy after Premier Li said that the nation's economic growth and unemployment must stay above a certain floor. The credit-fixing medicine threatened in China may not be quite as vigorous as first indicated. And finally, in Australia, the unemployment rate, which although is still only at 5.7%, has in fact risen to a 4-year high in the June quarter. Talk of an August rate cut is growing. We won't get our updated unemployment rate until the first week in August. It was 6.2% in March. New Zealand dollar starts today at 78.3 US cents, 85.4 Aussie cents, and the TWI is at 74.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.